Okay, it's the 1 year anniversary of this experiment, rental house versus high income ETF. 1 year ago, we sold this house. We took proceeds, 70,000, and we put it into a Robinhood account, and we've been investing some covered call ETFs. And this is 1 year update of how things have been going. So, episode 12.4. And so you see right there the 1 year results over 36%. So we're cutting right to the good part, 36% 1 year return. I had AI analyze my videos to see why people click away after about a minute. They basically, it's because people get bored. So let's not get bored, shall we? So remember to subscribe, like the video, notifications, and this one is important here. This is not financial advice. This is me making bad decisions here. Be warned. I like to look to see what the market is doing in general. This week we had all-time highs in the S&P 500, I believe. I think we did. Yes, we did. And I like to watch this Bollinger Band. It helps me decide what to do. So besides this, I sell cover calls and cash secured puts. And so I don't really watch this chart so much to decide when to buy for this account. I watch this more in general for my other doings, and I'm gonna start probably making some videos on my option trading just to show what I'm doing there in case people are interested. So anyhow, we have this Bollinger Band, we have the 20-day moving average, and we have the 50-day moving average. S&P has been pretty much above that 50-day average for ever since April, or is that May? And then it's been mostly above the 20-day average for 6 months or so. And it actually popped up above the Bollinger Band here for a little bit and then dipped back down. So I hope we have some red days next week because I got a couple cover calls written and I don't want it to go too high. So being a little selfish, aren't I? So anyhow, that is that. So let's get going and see what we got going here. So we start out with 70,000. Our equities at 94,000. Actually, I think it went over 95,000 after the screenshot. In my Excel sheet will show more current stuff. And margin, we're at under 76,000 right now, actually. But here's a pretty good idea of what we own. We got these QQQI, SPYI, GIAX, MAGY, AIPI, and QDTE. If you watched this last week, I rebalanced a little bit, try to equal these out a little bit more. And one of the reasons is because in case of a downturn, QDTE and AIPI did not seem to bounce back as well as QQQI and SPYI, which I own in some other accounts, and they bounced back decently. So anyhow, I want to balance this out a little bit. And my goal is to get QQQI and SPYI to be 70,000 of this account to be my core based anchor holdings. 70,000 is what I started with, and I have a lot of faith in QQQI and SPYI. So I want those to equal 70,000 eventually. And where are we? We are about 49,000. So another 20,000 will go into these two funds before I build these other ones up too much more. And what's happened recently, so we have some distributions that we've gotten and a few that we're going to get here before the end of the night, probably. So I'll start at the bottom. We have MAGY. We got $238 there on the 27th. And we got AIPI. We got almost $1,000, 977. And then we got our QDTE, 283. And then GIAX, 178. So on an annualized basis, MAGY is about 35%, AIPI is about 34%, QDTE is between 30 and 35%, and GIAX is a consistent 24% annualized yield. So that's not total return, that's the yield that it's paying. And we'll talk about total return here in a minute. So last week or the week before, I sold some shares of QDTE. Then I redistributed some of that in AIPI, QQQI, and MAGY. And so this is what I bought, and it shows what we did here. So this here shows everything I've been buying for the past year. And once again, this distribution. So this is for the month of October, which is just finishing up. And that we collected 39.91, not quite 4,000 this month for the month of October. And I think we had 5 Fridays. So yeah, we did. We got 5 payments of QDTE. These distributions used to be like $560 a week, like you see up here. But then I was selling some and then redistributing things into MAGY. So we'll be getting about the same amount per week. It's just that it'd be divided between QDTE and MAGY. Now, MAGY pays on Mondays, every Monday. QDTE pays every Friday. Some months will have 5 Mondays and some months will have 5 Fridays. So it will balance this out a little bit better. So anyhow, QQQI, that jumped up because we bought some more shares of that, 386, SPYI 158, MAGY 238, and AIPI 977, GIAX 178, and QDT 283. And we just talked about these ones here a few minutes ago. And this is what I want to get to. So at the beginning of this project, I projected how things would go. And then I'm keeping track how things are actually going. So over here is projected. Over here is actually what's happening. So up here on 11/1/2024, we started out with 70,000. And then within a few weeks, I start borrowing some margin because I wanted to supersize my account and get things accelerated and see how much money I could make. And so one of the things I decided to do is try to keep the margin at about 75% of my equity. So this is what the 75% here represents. And I started out doing these videos once a month, and I had figured that I could probably do 3.5% per month gain. Then I had a few people asking me after the first month if I was going to do some more of these updates more often. So I decided to start doing it weekly. So I changed things. I estimated I would get 0.75% per week. So that comes out to be just about 3.5% per month when you average it all out, give or take a few percent. For total gain, I would have expected if things would have went great, I'd be sitting at 48% right now, and I'd have 103,866 in my account. So the reality is that I got 95,500 in my account, which isn't all that bad. Early on, people told me I was crazy to even pretend and imagine that my account could grow at 0.75% of 1%. But a lot of weeks it did. In fact, you look over here, one week it went up 7%, but then it goes down 3% and up a little bit and down a little bit. And past 3 weeks, it's gone up, what, like 7, 8, 10% or more in just the last couple weeks. I actually see it was 85,000 here as recently as the 10th of October, actually. So the week before it was 89,000. So it's steadily has grown and done pretty good. But at one point it was down to 49,000. So I started at 70,000 and then in April it was at 49. So since April it has grown. It has, let's see, is that doubled? It's almost doubled since April, actually. So this 0.75% weekly gain is not unreasonable. If we wouldn't have had that downturn, we would probably be doing pretty close to this because QDTE and AIPI didn't recover, the NAV didn't recover like some other funds or indexes. So what do we actually have here? We got 95,500 in equity. We got 75,500 in margin that we're using, which is actually less than what I expected, but we're still over the 75% threshold here. I expected to grow at 70.75% per week, and you can see how that's doing. In total gain, we're at 36.43% compared to 48, which I had guessed. That was pretty optimistic, but me and I would take 36% every single year. There's nothing wrong with that. So this pink line represents the 1-year anniversary, and I'll leave that in there. The green line represents the into the calendar month. So in the calendar month, I'll recalculate my projections and everything and start over from January 1st. It's easier to keep track of everything from January 1 rather than keeping track of things from starting like November 1st of a calendar year. So compared to the stock market in general, so I'm at 36.48% for the year, and that's me being all happy, throwing money up in the air. And you can see the SPY. So this is from November 1st until actually that's yesterday. So it basically went up just a little bit, maybe sideways, but this is close enough. So 1 year it went up 16.82. That's basically the stock market, the SPY S&P 500 compared to 36%. So I more than doubled the S&P 500 my return. And the QQQ is a popular one that other people use. I have both these, so it's not like other people. So I compare things to the S&P 500, but I also compare things to QQQ because that's where I have about a third of our long-term savings probably in QQQ. And so that brought 25% for the year. Still, I'm at 36%. So AIPI, which is AIPI ETF, which is AI stocks covered calls, is up 22%. So not bad. And GIAX is up 11%. So I'm actually doing better than that because I didn't invest in GIAX until around April when it was at that dip. And if you look to see my total return here for GIAX, it's right here in the middle. I average cost is 1637. It's worth 1754. I haven't done the math, but I'm actually probably doing pretty well. So this returns about 24% yield, but because I got this at a cheaper price, my yield is probably like 30% based on my cost. If you follow all that, and getting back to this, so 11%, which isn't great, but I'm not going to sell my GIAX because my cost is lower than what it would have been if I would have bought it last November. But let's move on here. So QDTE, which was my very first fund, I was in love with that at first, and it was me and QDTE close friends. It was doing well for me, but it uses synthetic covered calls, and I won't get into what synthetic is, but basically it doesn't really own the underlying stock or ETFs. They use calls and puts to emulate the price of the stock. I don't want to get complicated, but anyhow, I like ETFs that actually own the stuff. And moving on, SPYI, which is one of my favorites, 13.58%. And then QQQI, which is another one of my favorites, was up total return 21.39. So this is total returns. This is the price appreciation of the NAV plus the distributions that it pays out. So when I said earlier that AIPI pays about 35% per year, it does, but the NAV has dropped, but the total return is still at 22%, if that makes sense. So QQQI, the NAV has increased, even though it only has like a 14% yield compared to 35%. This one here, the NAV has been going up, so the total returns at 21%, so pretty close to AIPI. So that's why I like QQQI a little bit better than AIPI. Just makes you feel better. So when we have downturns, when the NAV goes down, it comes back up more closely to the underlining, like the QQQ and the SPY. Bottom line, compared to the averages, we did pretty well. And this is all about that house we sold to how things are going with the ETFs. So if we would have kept that house, we would have collected $700 a month in rent, and we'd be paying 80 for insurance and 200 for taxes. We would be sitting at about $5,000. in cash flow, and I would have guesstimated that the house would have increased about 4% on average per year, which is $233 per month on average. So the house would be worth about 72,768. It's actually probably worth more than that. But anyhow, the equity and cash together is 77,836. So I've been saying all along that I'm going to make a video of what the expenses really were for the last couple of years and then average those out. I'll make that a separate video and just focus on like this slide and the expenses of the rental house, because I don't want to make these videos much longer than what they already are, which I try to keep these under about 15 minutes, but they get away from me sometimes. So anyhow, total, the rental house is sitting at about 77,000. The ETF sitting at 95,500 about. So the ETFs in 1 year beat the rental house by 17,664. So am I happy? Yeah, I'm happy. Would have been happy if it would have came out to be the same, because I haven't had any calls from any renters for the whole year. So life is great. So anyhow, that's the 1 year update. Once again, we were up 36% compared to S&P 500, which is about 16 or 17% in 1 year, 12 months since last November. And I'll keep doing these videos and then keep the same format to the end of the calendar year. And then in January, I'll redo my projection here and start over with this spreadsheet, and then probably keep this the same 0.75% to see how things go. So keep joining each week, and don't forget to and do all those good things.